All right, so good morning, everyone. Thank you so much for joining. I would like us to give about 5 minutes so that we can get in more participants and then we'll begin at exactly 10:05. Thank you. Okay. So good morning again. I'd like to confirm audio. If you can hear me, kindly let me know. Either you just chat in the box or something in the chat box, or just so that I can confirm audio. Thank you. Thank you so much, Emmanuel. I appreciate that. Right. So my name is Laumi, and first of all, I would like to thank you because this webinar was supposed to hold last week, and it couldn't get to hold it because of some operational challenges that we have. So I'm really grateful that you still were able to make it after the unplanned reschedule, and I apologize also for because we didn't hold it as scheduled. Right. So here today we are here to talk about investment readiness, and that's exactly why we set up this webinar. That's what you are here for, and so we'll go straight to it. This is going to be my presentation outline. I'll talk about the whole concept of investment readiness, what investors are seeking for our approach at Outlier Venture Lab. I'll delve into the different funding instruments that you can think about, talk about our programs that are coming up, and then I would maybe recap and then conclude. Right, so let's dive straight into the whole matter of the investment readiness. So there's always been this issue of access to finance, and it remains like a big hurdle for many SMEs and many startups. And the current economic situation, I mean, whether you are in Nigeria or other countries in Africa, the current economic situation hasn't really helped. I mean, we have high inflation here. We have the same conditions in many other African countries. Our currencies are depreciating. We all know how the Naira has transited from 700 to about 1,600, when you are converting it to a dollar in, a very short period. So these challenges have now become even worse because of those kind of problems. And then to add to that, many businesses are not really ready for financing. And this now limits your ability to access finance, right? And another thing is that many business owners, they are reluctant to seek external financing. And those of them that are like, okay, let's try and get funding from outside, they don't have the understanding of what investors are looking for. They don't know how to effectively present their business in a way that will be enticing and attractive to investors. So these kind of things are what I call demand side weaknesses, because the funding itself is from the supply side, which is from the investors. So the investors are looking at it as, why is there no demand? It's because of these weaknesses. And so there are many interventions. So you look at grants and other opportunities that are there. They exist. But because of these things I've described as called demand side weaknesses, it's difficult for that supply side, which is the investor side, to get businesses that they can really give funding to. So all these initiatives are being created to stimulate, business growth. They are not able to do that because of that key problem, investment readiness, right? So what do we do about this? Because of this gap, we have seen that, okay, what we can do is to put together a program called investment readiness. And we developed this to help increase pipeline or a pool of investable businesses. And we want to help them to become more attractive to investors. So many businesses, especially businesses that are in the impact space. So if you're in the impact space here, for instance, in agri space or energy or climate or health sector, or any business any sector that you consider yourself as impact space, one of the main sources of funding that is very, very credible will be the blended financing. And what that means is mixing a blend of government funding with private capital. But you see, just like any kind of financing, blended financing is very, very competitive, and it's not easy to access. So what we have done at Outlier Venture Lab is to help with accessing this funding by bringing together a lot of different programs and plans. So in today's session, you will be equipped. You will get what you need. You get the knowledge, you get the understanding to overcome these challenges, which I described earlier as weaknesses. And what we aim to do here today is to demystify what the financiers are looking for. So that big mystery, we want to demystify that and help you to present your business in a more effective manner. So today we're going to explore practical steps that will make your business financing ready. You're going to learn how to leverage different programs and opportunities. So you've probably heard of accelerators, you've heard of startup support programs, different programs, but you're going to learn how to leverage those programs. So by the end of the session, you really have a clear path to making your business more attractive to financing. So without further ado, I would like us to begin. So I'll begin by now officially, really fully introducing myself, because I know I just jumped right into it without telling you who I am and all that. So my name is Olatunji Olatunji, and I'm really happy that you are here today, because it's at a crucial time where businesses and business owners, startup founders need to understand what they're doing so that they can really get that growth trajectory that they're looking for. I've put together this course, and when I talk about experience, my experience spans over, say, about 17 years. I'm an ex-banker. I've worked with 2 commercial banks in Nigeria, and because of this, I know that there's this huge gap in SME and startup funding, and these commercial banks are not really meeting this gap. And after also working in consulting in the upstream oil and gas sector, I can also see that need to drive innovation in the sustainability sector. So when I started my first business, which is the hub, the Outlier Hub, so what we used to do was to provide facility rental business to the other businesses to help them drive revenue. And one of the businesses I helped, the very first one, my first fundraising was for Vicfold Recyclers. Is a circular economy business, so plastic recycling based in Ilorin, and I successfully helped him to raise $100,000. And after that, I supported about 7 or 6 more startups in different spaces, from energy, from recycling. One of them was also in the sports sector, to raise different amounts between $50,000 and $100,000 at the African Entrepreneurship Awards in Casablanca in Morocco. The programs like that AEA that I just mentioned, African Entrepreneurship Awards, they are highly competitive. But my own key to success is I help my clients gain a clear understanding of what the judges are seeking. A lot of businesses, before you even get to that stage where you want to pitch to judges, they would have done a lot of sifting and sorting and selected only the very best. So if you've gotten to that stage, then they've kind of separated the husk from the wheat, right? So you are one of the very best. But what does it take to now become the winners, the top 3 out of 50 is what I excel at helping. So now over the years also, I've helped numerous entrepreneurs to raise millions of dollars. I've advised companies in solar projects. I supported companies in fintech space, sustainable manufacturing, agriculture sector, and really many more. But my journey has led me from advising startups in African Entrepreneurship Award to Get Invest. Get Invest is an European program that helps renewable energy businesses in sub-Saharan Africa to become financing ready, and also to connect them to both local and international investors. In the past, I've also advised on Private Finance Advisory Network, which is also a global program. It's we operates in Africa, in Asia, in Pacific, and different continents like that. Just with that same goal, singular objective of helping businesses, project developers, entrepreneurs to raise financing. So I've had the opportunity really to compete to capital raising, to mobilizing investment on both local and a global stage. I've advised on organizations like Tomilumelu Foundation. That was much in the past. I've worked with Startups on Ashoka Foundation. I've worked with Alt Prize, supporting the students of the University of Ibadan at a point, again, incubator, and many more, and also with SMV, which is a Dutch development initiative. So these are the different organizations I have supported at different times in the past 17 years of my career. Now, when I combine all this, my experiences together in fundraising, in business development, in banking, consulting, with both local and international development institutions, I'm bringing to you that day here to help you understand what it takes, what I have to offer for in this financing readiness program, and that's what I want to share with you in this webinar. So I hope you are excited, as I am, to go ahead in this journey. Right. So before I go ahead, I would like to ask if there are any questions whatsoever. I want to make this this session as interactive as possible. So if there are any questions, please do not hesitate to either raise up your hands so that we can unmute you, or just simply chat in the box. I'll be happy to pause and take questions at any time. So right now, next, I've talked about myself, and I spent quite a couple of minutes doing that. Now I want to talk about Outlier Venture Lab. You probably just coming across that name, Outlier Venture Lab, and you may be wondering what exactly Outlier Venture Lab is. So Outlier Venture Lab is an ecosystem. What we're doing is to design a community to empower impact-driven businesses. So what is an impact-driven business? So if you're a business that is helping to address some of the challenges that have been listed in the Sustainable Development Goals, so whether you're in the agri sector, you're in the health sector, you are in the climate sector, or any sector that just wants to create impact, education, for instance, even manufacturing, find a way to put impact in what they're doing, so we cover a lot of sectors. So we're not totally sector agnostic, but we cover impact-driven sectors. And basically what we provide at Outlier Venture Lab is tailored support and resources. So we tailor the support to meet you at the very need. What exactly you need is what we are delivering to you to help you with growing your business. Network of opportunities, so networking opportunities with both local and international players in the value chain. We bring them to you. Access to capital, of course. We are not funding provider, so we don't have a fund of our own, but we are connected to different funds, both local and international, and we're able to connect you depending on what your business is or where you play. We're able to do that. We provide mentorship and coaching, market entry. For instance, you're trying to break into a new market. Let's say you want to take your business from Nigeria to Ghana. We can help you do that. If you're trying to start a new business in a different sector that you're not even familiar with, we are able to help you do that. And at the end of the day, what you are getting is a lot of recognition. People are getting to know about your brand because you are a part of the Outlier Venture Lab program. Right. So I'll go next now to talk about, okay, so I think I don't need to talk much about this because I've spoken about the objectives of the lesson, which has to do with trying to help you understand funding opportunities and funding readiness, help you develop the skills in financials and business growth and business movement to help you really, put your business in a way that is investment ready. Now, this chart features the top reasons for application rejection. I mean, usually before you access funding from any corporate institution, whether it be a bank or a grant or a VC firm, for instance, you have to make an application. And the key reasons are tied to low level of readiness. Now look at the first one. poor business plan, poor credit history, inadequate financial records, low market viability, limited understanding of funding. These key reasons are really tied to what we call you are not ready for funding. Yes, there are other reasons that are not directly tied. Maybe you are not very strong in relationship building, networking, or going out there. Then regulatory and legal challenges that may not necessarily be it's like outside your control as a business owner. Those are also some reasons. And then maybe there's a lack of investor confidence in maybe the sector or in also your own business, so that's another reason. And then there are just general external factors like economic factors or political factors that are totally out of your own control. So we can understand that. However, the core reasons for application rejections ties to low levels of readiness, in raising funding. And another thing is that these top reasons for application rejection, we can easily tie them. There's this direct correlation between the ability to stay in business, right? And the ability to generate cash, whether the cash is coming from outside or from inside. So whether it's external, whether it's revenue from your business or external funding. Now, if you look at this chart, these are the reasons that maybe businesses are not able to stay in business. So you see the first two that are boxed together: inadequate cash flow management. So whether they are not generating cash flow properly, or they are not even managing it in the proper way, or they have limited access to funding. So that is now directly related to the fact that businesses are, top businesses, they are not, they die after maybe businesses start, and you find the statistics that say businesses, they die after maybe 5 years, or the 20% of businesses do not exist again after 5 years or after 2 years. Those kind of statistics that you hear about in the news or when you're doing research. But another is, of course, you have ineffective marketing. If you are not putting your word out there, how would people know that you exist? There are other challenges that we're talking about, maybe economic instability, high operating costs, competition, market saturation, inadequate talent or HR management, of course, strategic management. But the point here is that there's that link, between your ability to stay in business and your ability to generate cash. So if you cannot generate cash from within your business, or you cannot get external funding to support you, you can't stay in business. Basically, that's what the core of this particular slide is talking about. So now I'll go to the concept of financing readiness. But before I go ahead, I would like to ask again, please, are there questions so far? Are there any points that you want me to clarify? If there's any point I need to clarify, so that we gather them quickly before we make progress. Right. Okay. So the concept of financing readiness is very, very important, and it is key to the growth of the business. So as a owner, to be financing ready, it requires a lot of research, a lot of preparation, and rehearsing. So when you say pitch practice, a lot of rehearsing and rehearsing for meetings and presentations. But what truly is that investment readiness? Okay, so Emmanuel is asking about credit history. Okay, so when we say credit, is it referring to the credit of the business owner? Well, two ways. If I'm trying to fund a project, so there's a concept called project financing, where you're funding a newly developed project. That's okay. Let me break it down. Let's say we want to set up a power plant, solar mini grid. Every mini grid can be set up as an SPV, so a special purpose vehicle to fund that particular mini grid. Now, this project financing will look at that project separate from the existing business. So in that situation, that SPV is a brand new business, and we don't really have credit history for it. So in that case, we might be looking at the directors and try to see, if they have good credit standing, right? But generally, when we're talking about corporate financing, we're talking about credit history of the business. So for instance, if you've taken maybe soft loans from, there are so many fintech that do online lending nowadays. There's a portal that they will go to and put your business name inside, and they can get a CRM and report about your business, where you are owing or what your performance that you have. So if you have poor, maybe you have a loan somewhere and you're not performing properly, that can actually impact your access to financing in other situations. So that's what I mean by that credit history. So in instances, they might look at the business owner itself for a particular reason, but generally we're talking about the business here, right? So I was saying that financing readiness, like as a hold on, let me check. There's another question. Okay, you just said thank you. All right, you're welcome, Emmanuel. So financing readiness really is that degree to which a business or even a business owner understands the key points that financiers want to know about that financing opportunity. So the first thing is understanding, right? And if you have that understanding, it will help you decide whether or not. So the financiers themselves, rather, it will help them decide whether or not they are interested in making an investment. So the understanding of the key points that the financiers want to know about your business or how to position your business, that will help in that decision making, in that investment decision making. The second thing is that understand how to position, to present the financing opportunity so that it has the best chance to attract investors. That's the second understanding, that's the presentation. You also want to understand how to present the financing opportunity from the financier's point of view. You want to understand how to present that financing opportunity from the financier's point of view. So if you are an investor, in fact, it's very simple. If you can think like this money belongs to you. So if you have 10 million naira today or 20 million naira today in your purse or your bank, and a young guy comes to you and say, "Uncle, I want to start this business. Please give me 8 million or give me 5 million." The first thing you will do is this guy going to pay me back? Your natural instincts will kick in for you to start thinking of the risk that may be in that business. So basically, that's how you should think as a business owner. What is the natural instinct of this investor that will kick in? If this fund belonged to me, would I invest in this business? That's the first and the best way to think about it. So investment readiness also thinks about negotiation. So you want to understand how to negotiate financing terms and the conditions that are attractive to your business, right? So that's another key part of investment readiness. You want to be able to understand financing terms and conditions and negotiate them. But really, we've talked about investment readiness, and then we'll ask that why is it important? You see, obtaining funding, investment, or financing can be very, very. It can take a long time. It can be time consuming. It can take a long time. In fact, I was listening to the CEO of InfraCredit some time ago, and he says that one of the challenges that they've seen is that it takes about maybe like 9 months to finish a funding project. And one of the things they're trying to do is to maybe create playbooks or templates where you can improve that process. I'm talking specifically now by maybe mini grids or energy projects, those big infrastructure projects. It takes a lot because there's a lot of due diligence, understanding, back and forth. There's a lot to do. So it can be a very time-consuming process, right? And it can be stressful. So if you have a clear understanding, if you are ready for financing, this will influence that time. So it will cut the back and forth, dramatically. It will really, really cut that because you have a clear understanding of what you're doing, right? So if you understand the time it takes and what it takes, it will help you move faster. Then also understand the costs. So for instance, if you understand that your project requires some approvals, for instance, you would have been preparing before time, and you might save costs because you have gotten everything. You might not have to pay, for consultants for long because you have already gotten information you needed before time. So it's very, very key. It also improves the terms and conditions for the investment. You understand what it takes, you know how to negotiate, right? And so that helps you improve the terms. So in many ways, financing readiness is a bit similar to due diligence, right? Right. But more importantly, financing readiness is important for you as a business owner, even if you're not raising funding right now. It's similar to what is needed to run a successful business, right? So even if your business is not planning to raise capital from maybe outside, you can benefit if you understand and embrace and implement some of those key principles of financing readiness. Why? Because it can help you understand how to even grow your own business better, to the point that you're like, okay, I don't even need financing readiness, because the core of external financing is if your business is generating so much revenue by itself, you can finance yourself. But if you understand what it takes, right, to grow your business properly, then you'll be more exposed to opportunities. So that's one. Now, another thing is that this concept of financing readiness, it's not a one-time thing. Like I tell people, when you say you have created a business plan or created a business model and you go and hang it, on the wall frame. No, it's something that you tweak and you make better. That is the same thing about financing readiness. So it's like a process. It's not just like a one event that you do and then that's it. So it involves very detailed assessment of different aspects of your business. So financing, legal, HR, that's staffing and human resources, governance. So how is your business governed? Operations, how do you operate on a day-to-day basis? So improving or preparing these aspects to make these aspects, it really helps make your business more attractive. So you'll be able to see what is wrong, where there are maybe loopholes, what issues exist, what problems exist, and how can I make it better? What can we do better? So, for instance, if you've been to buy me a retail business, a restaurant, for instance, and you go and purchase products there and you give feedback, and then you go back. If you're nice, right? Maybe you had poor customer service, for instance, and you were able to give feedback. And then you go back again there and nothing has changed. I bet you'll probably not go back to that business. In fact, you only go back there if you are nice. Someone like me, I will just lose interest because I'm like, hey, there's so much competition outside there. But the idea of investment readiness is not just about money. Why? Because you see, customers are the heart of your business. Why? They bring revenue. So putting systems and processes in place will help you, improve your customer service, right? Maybe, for instance, a feedback mechanism is a system and a process. So one of the key things, so that's operation I'm talking about. One of the key parts of investment readiness is operation. So I'm going to go further to talk more about these key components. In fact, what we did at Outlier Venture Lab is that we put together a proprietary method of assessing investment readiness. And I'm going to give as a gift here to everyone in attendance a checklist that you can use on your own to assess your own investment readiness. So we've designed an investment readiness checklist. So it's like a toolkit, but a checklist where you can fill the forms and then you get a score at the end of the day. So basically what we do with this framework is that we help businesses to look at the different aspects of their business, and then we come out with a report. So you have like a score, investment readiness score that can guide you to know where to improve, right? So we assess the different aspects of your business, and then we help you improve them and prepare this aspect to make sure that your business becomes more attractive. And what that does at the end of the day is that you are able to demonstrate that, this business is the value. Why you're able to demonstrate that my business is better than other competitors because of this thing. And that helps, show that, yes, this business is valuable, and then there's a high demand. So these key components we have here is systems and processes. I delved a little into that when I was talking about the customer service issues. Then we have the finance, number 3. Then we have people, impact, and then project viability. So I'll touch briefly on each of those aspects. Now, what are systems and processes? So we make decisions in our businesses every single day. So for instance, this webinar, before we started it, we created a flyer, for instance, and made an advert. And then when we made the advert, there was a content written in it. When the content was written, we advertised on Instagram or Facebook. And then we sent out emails. People attended. We have an admin at the back end checking to see that everything is going on well. You understand? So those are the different systems and processes. There's maybe there's the email marketing part of it. There's the Instagram marketing part of it. There's the design part of it. There's the, okay, after participants have joined this program, what are we expecting from this webinar? What is the reason we are doing this webinar? To introduce them to our program. But that's a whole complete process, right? So the decisions you make every single day, you are making so many decisions in your business as a business owner, as a running your business. You're probably making 1,000 decisions. So the processes are the steps, everyday steps that you take to help you improve efficiency. And the systems are the processes, the people, and the technology that help you run your business effectively. So the technology that we're using today, we're all on Zoom here. We have used technology. Instagram is technology. Zoho marketing, Zoho email marketing that we've used is also part of our technology. The people are our team that work on it. So there's Daniel and the other team members that worked on this as well. There's me and everybody. So those are the people. Then the processes are those steps that we take, every single thing that you. So as a business owner, you take 1,000 steps every day. So the idea is to document that process, all those steps, in a way that if your staff leaves the business today, somebody else new that is coming up to take up that job can take over. I always say this thing, that you need to transit from, for people that are early in the business, from being the chief everything officer, CEO, to the chief executive officer. And how do you do that? Is by having processes in place. Understanding the different aspects of your business. So there's marketing. I'm talking now specifically to early stage business owners that you are just the only one running. What do you do? Create a folder on your desktop. This folder means marketing. Everything that I have to do that has to do with marketing, I put the information there. This folder means HR, my staff, maybe employment letters for them. If there are any agreements or any information, maybe leave rosters of it, that's in another folder. Customers, another folder. So that when you want to hire your first hire, in fact, your mind already tells you who is the next person to hire. You're able to hire the next person and say, Mr. Marketer, this is your folder in charge. Accountant, this is your folder in charge. So that's I would call it a very, very early stage way of putting those processes in your business. But the concept is that document every step you take so that you can hand over, that business to somebody else. Or if a staff you've already employed is leaving, the new person, you will not go through the same process to now train a new person, because that is one of the most stressful parts of a business. If you have to train every new person the same thing again and again. But if there's a process in place, the person, of course, I'm not saying you will not train new staff, don't get me wrong. You definitely train new people, but you are able to hand over much easily because you have those processes and systems in place, right? The next thing is financial viability. Now here I'm talking about revenue. Are you even documenting it? I'm talking about cost. Do you understand the different cost structures of your business? Do you understand pricing? How did you come about the pricing? So the shoe that you're selling, did you just look through the internet to see that, okay, everybody sells this shoe for 5,000 or for 50,000, so let me sell my own for 48,000? That's not how to work. You have to understand the pricing. For assets, tangible assets, it's easy to just come up with I bought it for this amount, I'm putting a value on it, I'm putting a margin on it, and I'm selling it. But when you are a software business, for instance, it might become more complex, and you ought to understand how to come about your pricing. What maybe they need to put a buffer in it with the way exchange rates and prices are just changing every time in the market. You need to understand, you have to have a system of putting pricing. I had a similar experience when we first started our rental business, and we had to sit down and understand the cost that goes into every day of operation or every hour of operation. We broke it down to they call it the unit economics per hour of running that facility. What is the cost? So that if the cost, rent, fuel, salaries, other operations, everything that comes into it, then that was what we were able to use to determine what is the cost per hour to us and what is the price per hour to our clients. So that way, if a customer comes and says, can you charge this amount? Outright that there's no way I will charge this amount. That is already below my, the cost percentage that I'm able to sell at, or else I will just be serving you and I will not make any profit. So very important. Then you'll be talking about break-even costs, customer lifetime value, especially if you operate a software business, whatever kind of software. How long does it take this customer that is in this business? How long would he or she be a customer to us? So, for instance, if you're using Netflix, or we're using Zoom here today. Let's say I've been using Netflix since 2018. My lifetime value so far for Netflix now has been 6 years, right? So at the point when a new customer comes on board, there's a projection that you do, so like a projected customer lifetime value. How long will this customer stay with me before they go on to another customer? It's nice and sweet for a software business. You can hope that they need to keep using the software. For Netflix, I'm enjoying it for entertainment. For Zoom, it's useful for the presentation. But what if I'm selling a shoe? You have to think that, okay, if it's school shoe, this customer will most likely want to buy another school shoe for their child the next year. How do I ensure that they always come back to me? Do you understand? So those are the things that you think about. So those are the metrics that matter. And all these metrics, they flow into your financial model. So you have to understand what information your financial model is delivering. So when somebody looks at your financial model, an investor, what are they seeing there? Are they showing all those key matrices that are important? The next thing is project viability. So we want to understand technical viability. So if you are in a technical space, for instance, maybe it's a health business, right? And maybe some very interesting innovation in the health sector. Is this technically viable? Meaning that, will this thing last technically or it will fail? Now, number one. Number two is also market viability. How big is the market? How much can this market grow? It's very important to know. Then the business model itself that supports that financial viability. The business model also is, that's what the project viability. The business model itself is also very, very key. So how big is the market? What is the value what's that value proposition that business is even bringing forward is very important. Then, of course, we cannot talk about anything without talking about impact. In a world that ESG and impact is the key word, most investors are developing impact funds, and the ones that are not developing impact funds, they are tying ESG considerations into their projects. So it's important for you to start thinking about impact in what you're doing, whether you're in the space or not. So for instance, do you consider a genderless in your business? And what does a genderless mean? A genderless means that maybe you have female co-founders, or do you have equal proportion of co-founders, both male and female? Do you have maybe both male and female in of course, when you talk of genderless, the truth is that the world talks about female co-founders, female directors, do you serve female customers in your value chain? So your products, for instance, if you are a farmer, the products in the agri space, not necessarily that you're a farmer, you can say the farmers that supply products to us, we try to empower women, and make sure that maybe the women are the farmers or something. So that's a way to think about gender lens in your business. I mean, there's so many ways, but that's just a very good example. And then finally, under our proprietary investment readiness framework, governance. people, actually. In fact, we tied two things together, people and governance together. Now, the team is so key, right? One thing is clear to, as an investor, no matter the sector that they want to fund, investors, we want the same thing. The team that goes the extra mile to implement seamlessly. And you will know that from body language. You know that from the kind of vibe and the progress that they've made. There are some people that they go the extra mile. They can do anything just to make sure this thing works. I mean, as business owners, you see some staff, they have that vibe. Those are the kind of the team that we're looking for as an investor. So the team that you want to meet, no matter the problems that they face, no matter the economic challenges or the big regulatory challenges, they will go out of it to make sure you keep developing. So that extra mile to seamlessly is very rich. So for me, the team is the most important piece of the puzzle, right? Investors invest in people. So as founders, as entrepreneurs, you ask yourself, what do I really bring to the table? Truly, it's not just like I have a business idea. Do I have that drive? Then do I have what it takes to build the business that investors are looking at? Who are the team members? Have they worked together in the past? Maybe there was colleagues in school, or they were colleagues at work, and they've done some projects together, and they have what it takes to work together to execute this project. Then you talk about governance. Do you have a board, for instance, a board of advisors, even if you don't have a gigantic board of directors, or do you have a board? And do you guys meet regularly? Do they give you advice? Do they help you improve what you're doing? So governance is very key. Do you have standards that you follow? And and maybe if your business is regulated, have you applied for the right licenses, permits, and regulations? So that's very. So these key components are what we put together as our framework at Outlier Venture Lab to design and help business owners in investment readiness. So we help that, taking each of these key components to help you become more attractive to investors. So when investors see this, they are truly really excited about it. So I'm going to move to a new portion that talks about different kinds of funding, because I think it's important for us to talk about different kinds of funding. But before I go, I would like to take a pause and ask questions based on the things I've spoken about, so that it won't be like I'm just speaking and speeding, because I know I have that tendency to speak very fast. So I would like questions now. I'll just take a tiny break now. Just ask questions, maybe in the chat box, or if you want to, that's perfect as well. Just like a second break.
Hi, good morning.
Okay, so if there are no questions, I guess I might just go ahead. And now I want to talk about...
There's a question.
Oops, sorry about that.
Okay, so I don't know if you can hear me. Can everybody hear me?
Yes, I can hear you.
Okay, so I was just asking.
All right, so next is to talk about types of financing.
I don't think she can hear you.
Right, so we have different kinds of financing, as you may know. Okay, question is coming on board. So let's see. Good morning. I want to ask, what is the criteria you think for a social enterprise? Okay, very interesting question. When you're talking about a social enterprise, sorry, do you just give me 1 minute, Abimbola? Okay, all right, thank you, Emmanuel. You said someone was unmuted. Okay, so when I answer Abimbola's question, I'm sorry I didn't see you leave, Jay. You can, I don't know why I didn't hear that anyway, but let me answer Abimbola's question, then Jay can speak. All right, so you said that, what's the criteria that you think for a social enterprise? I'm not 100% sure what the question means, but let me just answer what I think you're trying to ask. So you're saying that for you to be a social enterprise, what are the criteria, if that's the question? Then I'll answer by saying this. A lot of businesses start, and if you are solving a social problem, you can be considered a social enterprise. But you see, a lot of not-for-profits like NGOs solve social problems. For instance, education. You go to a rural place and you say there's the students and the children there, they don't go to school and you want to start a school, but they can't afford to pay for education. So maybe you want to do something about it. Or you say there's do they call it high or low maternal health due to maybe there are no hospitals in a certain area and you want to set up hospitals. Or you say there are hospitals there, but they don't have access to electricity. And so you want to help them, providing electricity. So you can do that as a not-for-profit, right? And you're getting grants and you're funding your projects and you're making a lot of impact. That is perfect. However, if you're doing that and you're still able to make money, doing a social good, solving a huge social problem, but making money from it, then you're a social enterprise. Because the word enterprise means business. So you're like a social business. You are doing good and you're making money from it. So that is the definition of a social enterprise. So I hope I've answered your questions, Abimbola. Now, Liv J, I was told that you also had a question. So if you can unmute yourself now and speak, that would be good.
Okay, can you hear me now? Can you hear me now? Okay, I'll just type it.
Okay, I can't hear. I couldn't hear you. I can't hear you. If you don't mind, maybe you type the questions because for some reason I can't hear you. I know you tried to speak.
Hi, good morning, madam. Can you hear me, please?
So if you don't mind, maybe you type it when I see your question. Okay, great. When I see your questions, I would answer that. So, but if there are other questions, you could also type any other question in the chat box. It's perfect. Once I see your question, I would answer that. And Abimbola, if you think I got your questions right, okay, you said thank you. All right, thank you. I'm happy I was able to help. Right. So the next thing I was talking about the different types of financing. I'm sure we are probably familiar with the terms. There are different kinds of financing. Major ones: debt, which is loans, equity, part ownership, and then there's grants. Okay, so Joy here says that is it advisable to get a loan to finance a startup? So the way loans work is that it has to be based on your cash flow. So the definition of cash flow is a bit is fluid. And what I mean is this. Sorry, did I say the definition of startup rather is a bit fluid in that you can be, I'm starting this business, no track record. There's that. You can also be a startup if you are 3 years down the line, you have customers. So if you are tech-driven, like a fintech startup, you've been doing 3 years down the line, you have customers, right? But you need a lot of funding to blow up, to really, really go bigger and take it from where you are to where you want to be. So it depends on where you are, number one. But more importantly, for loans and for debt, you have to have cash flow. You have to have a track record. You have to have an history. For me to give you a loan, I must see that you can pay me back. Because the idea of a loan or debt is that you are going to pay back that loan from the revenues that you're making in the business, from the cash that you're making in the business. Do you understand? So because of that, you need to have track record. You need to have cash flow. So if you're a startup that you have been in business for a while, you're a tech-driven startup, but you have customers, then yes, you may be able to get a loan. That's the key part. But if you're a startup and you just want to start, no track record, nothing, except the loan is from your family that say, okay, do you know what, Joy, take this money. I trust you. I know that you can do it. And then when you start making money, no terms, nothing serious. When you start making money, you can pay me back. Except it's that unofficial kind of number. What if it's a loan from a commercial institution? You can't finance. So it's not even about advisable. It's about accessible. You won't even be able to access it. So that's just the key. So I'm still not getting the question from Liv, but I will continue now. So like I was saying, everybody knows what debt is. Okay, I got your question now. So you say that you are in the process of restructuring your business. It can be categorized as a social enterprise as well, impacting mental health awareness. At this point, is it best to hire someone to do the restructuring or do it yourself? It really depends. If you understand what it means, what you want to achieve. I mean, restructuring is broad word. So what are you trying to do, right? Are you trying to re-register, for instance? So if you want to re-register, if you know how to go to, what they call it, CAC office by yourself, maybe you want to register. Of course, most people will just hire a lawyer or an accountant to help them with the restructure, with the re-registering. So if you want to restructure in terms of scale, funding, structure and processes. Okay, so I get that. I get that perfectly now. So the general, like putting structures in your business, trying to make your business more attractive and more scalable, you know, if you know what it takes, if you really know what it takes, you can work with someone to help you. There's something I like to call outside insight. So sometimes when you are running a business, I mean, an experienced business owner, there's some things you just don't see. Just like, you know, when you come to a room, you always come to your room, your furniture is in a certain way. It looks fine to you. You will not see it. But someone else comes and be like, why don't you remove this? Why don't you be like, wow, I didn't think of that. That's what outside insight does. And then when you rearrange the sitting room, everything looks perfectly beautiful because of that outside insight, or because you step out and you look at it, giving it a different perspective. So basically what I'm saying is that working with experts can give you a different perspective. But sometimes we are, if you know you can do, you do to the extent which you can do, and then you can now get outside. So interestingly, I didn't want to talk about this but till the end, but we have a program. I mean, the essence of this webinar is to introduce you to our program that can help you in this regard. You know, we'll probably talk about that. I'll talk about that when I'm done. Right. So debt generally, sorry, let me know if I answered your question well, right? Okay, you said, okay, thanks. Okay, right. So I assume I've answered your question very well. Right. So debt involves borrowing money. I mean, basic now, we all know what loan is. We all know what a debt is. Banks are always saying get loan. There are microfinances everywhere. There are money lending apps everywhere saying get this loan, get this loan. You know, so basically you get borrow money from lenders, and then you promise them that you make a certain repayment with interest over a specified period of time. Sometimes, most times, the repayment will be fixed, and interest rates are also maybe fixed or floating, right? And then equity involves selling ownership of your business. So ownership stakes, part of your business, you're able to sell that out to investors, and then they own part of the business. So when you're registering your business with CAC at the beginning, if you register as a limited liability company, for instance, different shareholders have, right, 20%, 30%, 50%. If you are the only one, maybe sole proprietor, you will probably own 100%. If you are limited, if you have two partners, you have 50%. So that ownership stake means that you are the owner of this business. So if you bring in external equity investors, the structure of that business will change, and different people will own different. So the investors probably will now own a certain percentage, depending on how much money you have gotten from them and how the valuation went. So basically, I mean, those are basic things. And then we have grants. We all know about grants. It's just dash money, free money, non-refundable, often provided by maybe foundations, government agencies, and the purpose is to support specific projects and initiatives. And there's no repayment. You know, and very important for early stage businesses to access grants because it will help you, you know, reach winning in competitions, right? So I'm going to pause here to answer Ajibola's question. So Ajibola says, I have a registered company limited by shares. The main focus of our business is to operate a social enterprise focused on achieving the UN SDG by carrying out relevant projects based on the different goals. Okay, can we apply for grants and get it, even if we have not started and we don't have track record, but we have a board and a good team? To be truthful, the key, you know, grants are competitive, meaning that everybody thinks their business deserves a grant. Everybody thinks their business is better than the other ones. So I've seen grants given to ideas before, but you know, these terminologies are also still fluid. If, for instance, I want to start, let's use your example now. You're not quite clear about what exactly that you are doing. That's in which one of the SDGs you have to focus on. But let's just assume that your SDG is focused on health sector, and you need to use driving technology to do something. You have a website, you are clear about what you want to do, you have your board, it's always better to test the market to have the traction. So try to do what you're doing, what you want to do. Gather a few people, gather a few customers, social enterprise, and test if this thing is real. Because you are competing with, our population in Africa, our population in Nigeria. And if it's a global grant, the whole world's population, the number of businesses that are trying to do what you're doing, or they're already doing what you're doing. So you need to have traction. They call it MVP in the tech space, the minimum viable product. So you try to have something to show. When you are in school and a teacher is teaching you, a teacher that comes and just speak, is different from a teacher that says, let's do practical. You are able to see and believe. This is a similar mindset. So you have to try to do something to first understand the market, even yourself, because when you launch into the market, you begin to see the way you have perceived the market, what you thought was going to happen is totally different. So, for instance, I'll give you an instance. So there was a tech startup that they were solving a health challenge. And what they were doing is that they were creating a product, and they thought that, okay, this product, right, we can sell it to people that have this particular health challenge. But they found out that, so they found out that they were not getting customers, right? What they now found out was that the real people that were using that product were the nurses and the hospital staff, that the ones using it for the staff. So selling it to a customer, a sick person, was useless. So they had to rechange their strategy. So it is until you launch into the market before you start seeing, they now realize that the user is the person using it, but it's not the customer. The customer should be the hospital, not the people. So you're able to see different things that will help you change, your approach to reaching the market and all that. Right. So now I have a tiny case study here. And the case study here is Sunfire. So I will stop sharing my screen shortly, but let me just quickly run through Rotimi. So Rotimi has graced our event at After Venture Lab last year. And basically what they've done is I started installing solar systems, just like many solar businesses. And then they decided to pivot and change from solar services because of, now if you want to set up a solar system, you need to have tangible money in solar home systems. So what they did is that they founded Sunfire with his partners, Tomiwa and Laulu. And what they're doing is a fintech company, and they're now offering credit. So instead of you being in the installer, you decide to go fintech and start offering credit to solar service providers. Solar service providers, make it more affordable. And successfully, they raised $2.3 million in seed funding. So I'm going to stop sharing my screen now. I'll still share it again, but I wanted to show just a brief, what they call it, a brief video from the last meeting we had that it was there. I believe this is it. Oh, okay, I'm sharing from. So I would like to confirm if you can hear the video playing.
And then that's what should drive you, because for me, what I love.
Can you hear anything? I paused it, but I wanted to confirm you can hear before I continue.
Yes, you can hear.
When I'm leaving a potential investor, and I'm wishing that kind, even if I had my own money.
Okay, great. So you said you can hear. So I'm now continuing playing. The person that is speaking right now is Olumide, but after he finishes, Rotimi will start speaking. I mean, there's something very important that he said during the last webinar that we had, when we asked the question that if I'm looking to raise funds, usually what are the challenges? So I wanted him to speak from the position of the real life challenges that he has had, and so that's what I wanted you to listen to.
When you live in a business, I'll put money in this person's business. Once you can get me to that point, you can be sure I'm going to invest in your money. I'm going to. So when I hear that, don't worry, I'm sure in my mind that is. So it's really for you to think through that idea, that to ensure that anybody listening to you understands what you're trying to do and how you plan to achieve that your goal, not in promises or using anecdotes, but clearly stating how you're planning to do it. I think it's very important.
Okay, thank you so much. So I'm going to ask Rotimi the question now, then you'll be able to hear his response. Rotimi, what challenges do you think, maybe from your experience, the kind of challenges you faced, and or general challenges that other people have faced?
Yeah. So once again, it depends on the type of capital that you're raising, but when we were building our first business, Aspire, we were essentially like doing solar installations across Nigeria, and I left a very pretty good job to come do this. I was working for Siemens, and we had all the money and whatever in the world to go and be investing in power plants across Africa, and they treated you like a star, right? And so I came in to and saw that, well, I don't think this grid thing is going to work for at least 100 years if we keep doing it at the pace that we're doing it right now. So I was very compelled to go into the startup space. But I have to tell you, leaving corporate world and jumping into startup, honestly, I didn't yet have the chops to be an entrepreneur. Like I thought that I could. And I think the proof ultimately ends up being in the fact that you have to go through this journey. There's like the Greek narrative of the heroes, the arc of a hero, like the hero's journey. You first kind of go through a process of being called, and then you're called into the thing, you reject the thing. So I rejected it for a long period of time. And then eventually you have this moment that breaks you, right? It breaks you. And then it's from that breaking that you now start being rebuilt as an entrepreneur. So that process for me was, we came into the first business, we thought we knew what we were doing. And then we started finding that, this thing called building a technology company, it's a very specific type of company you have to be building for venture capitalists to come and invest in it. When they were looking at our first company, they kept saying, this thing, you're basically like a glorified installer, if you will, right? Like, you're building an asset heavy, you're almost trying to be like an OEM, and none of them want to invest for the most part. I'm not saying there are not funds that do that, but most of them don't want to invest in hardware companies. That's just the truth. Venture capitalists. I'm not saying that there aren't other types of investors that will do that. So you have to know the investor type. We kept going to venture capitalists with a solar installation business, and then they kept hitting us with this thing that Lumide talked about. How are you going to scale this? Once we couldn't give how are you going to scale this means with a small team, with limited resources. How do you go from, with the same limited resources, how do you serve 1 million people with that same limited resources? You don't go and hire 1 million people, right? You only have 100 people, 100 people serving 1 million people. That's scale. One technology, you build this one time, and it can enable, billions of dollars worth, versus having to constantly keep investing, billions of dollars in order to get billions of dollars. That's not the same as scale. And so it wasn't until we experienced this, like getting rejected tons of times, that we now had a moment and I said, we're not going to reach our goal going this way. And so we had to really break ourselves and then start building ourselves back up. And that's when we came up with the Sunfi version that now understood that what we need to do is enable other entrepreneurs in the market to serve their communities. And that way, one technology will be able to enable those people just with embedded financing to reach millions of other people. And so that was where we had a strong pivot. So pivoting, being broken is part of the process, and allowing VCs and investors to give you hard feedback so you can rebuild yourself is something that I would say is a good challenge, good problem to experience and go through.
Okay, that's that. All right, so that was very, very important for me. It touched on two key things. What I had said earlier. Oops, I'm so sorry. Something. So it touched on two key things. What I had said earlier about the fact that you need to kind of test the market. You can't know what will happen in the market just by having an idea. Until you actually get there, you are able to see what the market is speaking about. That's number one. But one other key thing that Rotimi said was, you need to understand the different kinds of investors that exist in the market, and to know what they're looking for, so that you can position. Firstly, you can even go to the right kind of investors. He said they were going to VCs, and VCs are looking at not asset-heavy businesses. Anybody in climate space, impact space, their businesses are often asset-heavy, agriculture, infrastructure. They're always very asset-heavy, and VCs are looking for tech. Maybe if you're in climate space, but maybe, for instance, your business is insurance, and maybe insure tech, you're trying to insure agri products. Yeah, that's tech. So they might be interested in that. So but asset-heavy businesses, the VCs don't want. So you need to understand. So if I can't go to VCs and I'm a startup, what kind of investors do I need to go to? You need to understand where to turn to. So that's the kind of challenges. But I mean, it's doable, and that's why I had to share Rotimi's story, for you. So if you want to watch the remaining of that video, you can find it on our YouTube channel, actually. So the video is actually very interesting, because we had both Olumide Lawson from Sahel Capital. It's at a Greek firm. They invest in agri businesses. So we had him speak as well. And I also spoke, on that topic. And I think it was about how to raise your first $1 million. That was the title of that particular video. So you can go and watch that thing. Right. So next up, yeah. So I just wanted to show you. I've talked about leverage. I think this slide, I should have put it much earlier when I was talking about Live Venture Lab. But this is our team, and we have a few of us, and we have some interns that have joined us as well. Then we have some advisory members that help us from, to put some structures and understand what we're doing and guide us, in ways to establish our work properly. Yeah, so now it's time for me to talk about our program, which is the Investment Readiness Program that is coming up. We've designed it as a 6-week program, and is designed really for businesses in the impact space, right? So this program will equip you with the skills and knowledge that you need to scale your impact. So you can see the part. So it talks about, first you understand the funding landscape, then we talk about financial proficiency. So I've talked about customer lifetime value, financial model, different things there. So this is where you get the nitty-gritty of what you need to understand and put in place, right? Then understand the funding. It's good to understand something now, but how do you navigate? How do you understand the different investors, and how do you move from, okay, I shouldn't be working with VCs, I should be working with impact investors. How do you, move around that is important. Then we have an investment readiness assessment, which will use our customized tool to help you look at different aspects of your business. And like I said earlier, investment readiness is important for raising funding, but it's very key even for your own business, like to grow the business itself, right? So we'll use those key different aspects of investment readiness to help you, and then we'll give you a report. So there's a scoring system that we've developed internally. We'll give you a report that is useful for you. So you see, this is our program, something that we push to investors themselves. So sometimes if they want to invest in a particular business, they can say, take this business and help us check and give us a score of their investment readiness, So that's the tool we use. And then next, we talk about documentation, very key, and the due diligence process. And then finally, we'll end this whole process with a pitch day or a deal day, where you're actually able to come in front of some of our partner investors and pitch your project and your business to them. So that's the whole project. And the cost to us is about 225,000 Naira. But we have put this together with the help of our partners at Brockville Investments, and for a limited time offer of 56,000 Naira. So you can get that because of the support and sponsorship from Brockville to be able to access that. So for 56,000 Naira, you can actually access the project. So you have to use the discount code Brockville, and this is the payment link. We will send this after we're done. Daniel will send that to attendees, but it's only limited for 24 hours. So by this time Monday, the discount code will expire. So if you want to access a product that is valued at 225,000, if you want to enjoy it for 56,000 naira, you should do that in the next 24 hours. So now, okay, why did I even put this slide? Okay, so I was just trying to talk about the investment readiness toolkit, why it is important. So the statistics, I was talking about some statistics earlier on, if you recall. They say 20% of businesses that die within the first year. By the time you get to year 3, 43% of them, then by year 5, the businesses are shut down, they're closed shop and they've all gone home. Why? Because they don't understand what it takes. And I know the first thing I said was that, we call it investment readiness or funding readiness program. But if you look at it, it is actually for you to understand how to grow your business to a place where you are attractive to investors, and then they are saying, can you come, let's invest in you. You're like, no, don't worry. My business is making enough revenue. We are very okay. So the toolkit will help you do that. We're also going to send, and as I said earlier, we're going to send a checklist. So there's a checklist that we've designed. We're going to give you that free of cost. That you can actually use that by yourself to just mark checklists and get like a rating of your investment readiness. So I believe I've spoken a lot. This is 11:16, so it's over an hour that we've been speaking. If there are any questions, I'll be really, really glad to take those questions again. So I can just pause for a few minutes. If there are questions, if you just ask questions. Maybe you want to know more about the program. I can run through that again. Okay, Samson is raising up his hand. Okay, yeah, so you can unmute Samson.
Okay, good morning, Ma. My name is Samson. Yeah,
I know you're speaking, but unfortunately I can't hear you.
Okay, just a minute.
Okay, let me check the chat. I can't hear Samson now, but I can see your mic.
How about now? Can you hear me?
Okay, so Samson, if you can type your questions, I would be happy to read it out and discuss.
I think
you're quite
you may
welcome.
need to check your speaker.
I
We
will
can
take
hear
your questions,
something
Samson,
here.
if you can chat it in the box. Since I can't hear you, I don't know if there's a Zoom setting that is not allowing others to speak. Maybe that's what has been set by a tech person, but
we can hear something.
Hello.
Anyway, so okay, Samson, can you try again? So someone has come to help me with my speaker here.
All right.
Okay,
good
so
morning. Better.
Yes, I can hear you now. So it was from my end. There was something wrong with the speaker I selected, but I was helped now. So yes, please go ahead.
Okay, yeah, good morning. Good morning, everyone. Yeah, my name is Samson Rajmaki. Sorry, I joined the call late. I was supposed to join by 9, but I had other engagements, so I joined late, and by the time I joined, the call was already wrapping up. So the essence of me joining the call is because I'm trying to run a startup with a group of friends, and funding is a challenge for us. So I was hoping that coming on this call, I was going to see some respite. So I don't know if you've addressed something that relates to that already, but yeah, if you've done that already, please, can you just run through and let me see how I can benefit from the platform? Thanks.
Sorry, can you say that again? You said, what should I run through again? What specifically do you want me to run through?
Okay, so I just said what I am looking out for, right? I'm trying to run a startup with a group of friends rather, and funding is a major challenge for us. We don't have the adequate funding. We have the ideas. We've created a website to set up the platforms, but then we need funds to start getting some materials, and those are going to cost us a lot. So we are kind of looking for capital. So I don't know if that is available on this program. But if it's not, I don't know if there are other things that are available on this program that we can, maybe key into as that could be beneficial to us. Yeah. I don't know if you get my question now.
Yes, I understand now. So it's just like starting, but you don't have funding. So basically, that's what your question has to do about. Yes, so I think I answered a similar question earlier on that, you registered and everything, but you don't have the funding to start. And what I said is that grants are available, but the point is that grants are extremely competitive. Like you're competing with the whole of Nigeria, the whole of Africa, so you have to have something that you have started. And many times, the starting is about proving the concept for your own self, understanding that, okay, this is how this business will go. This is what we're doing, and this is how customers will respond to the value that we're offering. So if you do not have any money to start, perhaps you can find a way to start at a different level. Meaning that, for instance, if you wanted to start a recycling business, in fact, there's a question about from Abimbola on recycling. So let's say you wanted to start a recycling business and you have not started. Okay, I'm not showing Victor's picture here, but Victor from Vicfold Recycling, when Victor started, he started by collecting plastics. He had a 3-bedroom flat in Ilorin, and he filled the old 3-bedroom flat with plastics, and he wasn't selling it. He was collecting because he knew that one day he would get access to enough funding to be able to turn those plastics to pellets and then sell. That is more lucrative. So he did that instead of selling. And what he did to make his business innovative was to add technology to what he was doing. So being someone that designs website by himself, he sat down and designed it. So there are some, we like capital. That word capital, many times we say is money. But capital sometimes can mean many other things. It's like one message I've listened to, they called it the mystery of capital. Capital can be locked in land. It can be locked in human resources. There are some services that you can get, help get people to do for you in exchange for some other service, like trade by barter. Those days, 1 million years ago, before when there was trade by barter. So the point I'm making is that there are some things you can get done, So 2 things. The first thing I said was maybe you can start at a different part of the value chain. There's a man called Vuzi Tembakwa, if you know, South African speaker like that. He said, if you want to start a poultry, the first thing you do is to buy eggs and trade it. And then you make money. Then you continue trading, buy 1 crate, buy 2 crates. The next thing you're buying a truck. The next thing you're now buying chickens. Now, if someone wants to say, how old is your business? You say, I have track record. I've been trading eggs for the past XYZ years. But if you're waiting till you have enough money to set up a poultry, then you will never trade eggs. You will not understand that value chain, because don't forget, even if you set up a poultry today, you are still going to trade your eggs. So 2 things you are gaining. You are gaining track record. You are gaining understanding of the business from trading with just 1 crate before you get to the point where you are going to build your poultry. So maybe there's a way to look at your business slightly differently and start where you are with what you have. So that's one way of looking at it. Then I can't remember the second thing I said. Yes, I remember now. The second thing I said was that there are situations where it's possible for you to exchange service, for money. So for instance, somebody wants to offer you a service. You can say, okay, very good example. You say you're starting your business with different people. So just found that each of them must have something they are bringing to the table. If someone is a software developer, for instance, you might not have to get paid. Even if you get paid, maybe something small to start. So there are other ways to make that work, basically. Right. So I hope I've been able to answer your question, Samson. So Abimbola says that he has started a social enterprise and they're already collecting plastics, and they're looking to get grants. So this program was startup support that we did in 2019. This the picture that you're looking at. And yes, all these businesses, they're either recycling bricks, or they're usually using plastic to make bricks or recycling. They are just in their social enterprise space in different ways. So yes, there are grants are applicable to different sectors in the circular economy, renewable energy, and all that. So one of the things that you can benefit for joining Outlier Venture Lab, and I think that's what I should do next, to just share with you a platform where you can actually you can actually register to become a part of Outlier Venture Lab. Let me see. Okay, I need to open Chrome to do that. So once you join, we have access to resources for you that are very beneficial to you. Right. So just give me a second. I'll share my screen. Okay. If you can see it, so that's our website. So if you go to outlierventurelab.com, you'll be able to register. If you put /subscribe, you can actually subscribe to be a member. So that's just the way. So yes, we have in fact, the important thing I wanted to say here was that we have a pool or a database of different investors and investment opportunities and grants in different sectors that you can have access to, and you'll be able to benefit that if you become a member of Outlier Venture Lab. So we have a free membership that there are a lot of benefits as well, and we also have the annual membership that is also valuable. So yeah. So yes, to answer your question, there are grants that are available, and then you can get access to a lot of them. So that's that. So if there's any other questions, I will happily take that. But in the absence of questions, I would like to say thank you guys. I really am honored to have you here and to have you have waited this long to for the whole process from the beginning and to the end. And then the fact that we didn't hold it last week and then you still came, despite the fact that we rescheduled. I'm grateful for that. So if there are more questions, I can still take them. We can still hang. Don't forget to check our YouTube link. In fact, I will share that particular video where we hosted Olumide and Rotimi. That was a very powerful session. Olumide is a director at Sahel Capital. So they actually have a FAFIN fund that funds agribusiness, but it brought a lot of insights into that discussion that day. So it would be nice if you want to benefit from that discussion. So in the absence of questions, I think it's a good time to say thank you. Thank you, everyone. I really appreciate your presence.
Thank you.
Yeah. All right, then have a nice rest of your Saturday. Bye-bye.
Bye.